And if we talk about the wider tokenized capital markets, some detractors could say how much sense does it make to take one step when the wider capital markets aren't there yet? How do you think about this step that you've done here related to the wider ecosystem, missing pieces of the puzzle, and so on and so forth?
Well, we actually see we think we're arriving at some pretty important inflection points. We say the capital markets aren't here yet, but in the U.S., NASDAQ has filed for plans and is seeking permission from the SEC to list all of the NASDAQ stocks, not just in the same registry form that they're currently using, but bringing them into token form, on blockchain rails. And that's a big tipping point because we're moving directly to the issuance on chain of securities, by a major issuer. We foresee that to be continuing to occurring, quite frankly, and that to gain momentum. We just have a lot of confidence that these pipes are an improvement over the existing pipage that underlie, capital markets, financial system, banking, and an upgrading of those pipes to these new blockchain-enabled pipes are going to generate new and interesting outcomes and benefits. One of these that we have on.
Hello and welcome to another episode of RULEMATCH Spot On, the only podcast focused exclusively on the institutional crypto and digital assets industry. My name is Ian Simpson, and if you want to know what banks, hedge funds, asset managers, and others are doing in crypto and digital assets, and more importantly, how they're doing it, this is the place for you. And now to my guest today, Roger Bayston. He is Executive Director and Head of Digital Assets at Franklin Templeton, the California-based asset manager with over $1.6 trillion in assets under management and over 1,500 investment professionals. Roger has been at Franklin Templeton since 1991, so he knows the company pretty well, and I look forward to picking his brain about digital assets at Franklin Templeton, and not only today. Roger, welcome to RULEMATCH Spot On.
Yeah, thanks for having me.
Of course, we should mention that nothing which is mentioned today should be considered investment advice in any way. So Franklin Templeton launched its tokenized money market fund, FOBXX, about 4 years ago in 2021. In the meantime, it's accumulated over $500 million in assets, which is quite remarkable, actually. Maybe to just start off and put it rather bluntly, who was this product for? Why was it launched? Was it for crypto natives? Was it just a marketing stunt? What was the idea behind the product?
Well, I would say the real idea that was behind FOBXX was the germination of our R&D activities in blockchain. We were looking for, we were attentive to the fact that distributed ledger technologies were beginning to proliferate. The success and market adoption of Bitcoin itself, was speaking to that. And I was wise enough with all of these years of experience in asset management, going back to really 1986. We were attentive to the fact that word ledger was really important, right? Ledger, records, asset management, capital markets, full of records. And so I was just being fairly aggressive in sharing some, of these insights with my friend and our current CEO, Jennifer Johnson, to say, hey, this technology, this distributed ledger technology, maybe we ignore Bitcoin itself at the moment, but this feels like it's going to be a disruptive situation to asset management. And, when you say disruptive, it can be a couple different things. It can be obviously what's this going to do to our legacy business, but also what are the opportunities that might unfold. And so really what just happened was Jenny was asking me, well, tell me what you'd like to, propose something you'd like to do. Franklin Templeton Investments, $1.6 trillion in assets, providing advice through a number of different vehicles. Funds themselves are securities. So we are in the securities-related businesses, by and large, and so we have transfer agency responsibilities as in having the permissions to sell securities, issue and sell securities. And inside of all that, there are record-keeping systems that I was just proposing that we update those transfer agency record-keeping systems to use blockchain. And the question she came back, well, what do you do it? I said, well, let's do it on a money fund, quite frankly. And really the only insight there was because the velocity of activity in money funds is higher than in longer-term investment vehicles. And I was just only projecting that if we could solve this problem or enhance or modernize the transfer agency system using these blockchains for a money fund, then that would be adaptable for the entire other suite of products and services we had. And so really what the idea is, we knew and we know that money funds are a brand, a vehicle of trust for those who want liquidity and low risk. I mean, I think in the United States alone, there's over $7 trillion in money fund assets. So we felt like, there was going to be a marketplace. We weren't inventing something where there was no market. There was already, massive adoption for money funds for literally decades by individuals and institutions. And I think we were just trying to say, okay, now we're in this blockchain space. What do we do with a tokenized money fund?
So at the beginning, it was to prove it, to update, to try it out, in a way, a POC in one sense. Now there's so much in the fund at this point. So who is buying it? What is the use case in the market environment?
Yeah, I think it's a really important thing to designate these. It's just a money fund.
Yeah.
Right. And money funds are governed by different rules and regulatory constructs all over planet Earth. And so there's actually several tokenized money funds, which we affectionately call BENJI, by the way. You can make the tie-in with Franklin.
Of course, yeah.
The $100 bill has a picture
Yes.
of Ben Franklin on it, and
So does the
oftentimes they're
logo,
referred to
yeah.
as BENJIs, right?
Yeah.
So all of that felt like it's an appropriate thing to be labeling it and branding it as such. But this idea that there's multiple, what we're really finding is when you're on these blockchain rails, a tokenized money fund like BENJI offers similar flexibility and functionality to the massive stablecoin industry that has been growing. It will continue to grow. We see huge tailwinds on stablecoins themselves. And key differentiation, though, between a money fund and a stablecoin is the money fund offers yield, right? Yield matters. Income matters to investors. And where we're really finding a lot of pickup is specifically very crypto-native hedge funds and investment strategies that are currently using stablecoins as collateral, swapping those out and substituting that and allowing BENJI to come alongside those stablecoins to be able to give participants the yield that they want to help alter the economics of trades and improve those outcomes. That's kind of where we're finding it currently. But man, we keep uncovering use cases for tokenized money funds because taking one of the most boring things on planet Earth, which is a U.S. government fund, money fund, and put it on these blockchain rails increases the utility of it, which previously didn't exist. It actually makes, I think in the U.S., the Federal Reserve and monetary policy authorities think of money funds as M2 in their calculations. It actually takes this thing that's M2 and makes it act like fiat, quite frankly. Again, with the great difference that you get yield. So there's a lot of different use cases that we're unpacking, quite frankly. And there's multiple securities that are involved, representations of different BENJIs related to the jurisdictions and the securities regulations globally.
Right. So it's developed. There was that original use case and things coming up all the time. And obviously this was a pioneering step, and we won't go too much into the deep details of the entire tech setup and all of that. I mean, you have done this thing. It's out there. It's attracted a lot of attention. And yet it's one step, right? And if we talk about the wider tokenized capital markets, some detractors could say how much sense does it make to take one step when the wider capital markets aren't there yet? How do you think about this step that you've done here related to the wider ecosystem missing pieces of the puzzle, and so on and so forth?
Well, we actually see we think we're arriving at some pretty important inflection points. We say the capital markets aren't here yet, but in the U.S., NASDAQ has filed for plans and is seeking permission from the SEC to list all of the NASDAQ stocks, not just in the same registry form that they're currently using, but bringing them into token form, on blockchain rails. And that's a big tipping point, because we're moving directly to the issuance on chain of securities, by a major issuer. We foresee that to be continuing to occurring, quite frankly, and that to gain momentum. We just have a lot of confidence that these pipes are an improvement over the existing pipage that underlie, capital markets, financial system, banking, and an upgrading of those pipes to these new blockchain-enabled pipes are going to generate new and interesting outcomes and benefits. One of these that we have unpacked specifically on a money fund by operating on these rails. Again, money funds have always been transferable. I could transfer you a money fund, but there's a lot of latency in that underlying system of allowing that transfer to happen. Well, upgrading to these new platforms allows BENJI to move literally as fast as a new block can be appended on a blockchain. And some of these new state-of-the-art modernized blockchains, that happens in fractions of a second, quite frankly. So an instant transferability, that feels like it really aids in this atomic settlement that we speak about so often. But in addition, into moving quicker, one of the things that we've unpacked and we've created for BENJI specifically is the idea that we've taken the 24-hour clock and we've taken it into 1-second resolutions. So literally, if you're a holder of BENJI and you own BENJI, you are earning interest every second of the day. And if you decide to move out of BENJI, transfer BENJI to another user, no matter when you transfer, you still have earned all of that interest for the portions of the day that you had. That's a big step for financial markets, that you are getting this interest not on a 24-hour clock, but literally every second of the day. That creates new and very large new markets for a money fund construct that previously didn't exist. And those markets really, quite frankly, measure in the trillions and trillions of dollars. Using a money fund as collateral because of these new rails, because of operating on these new rails and the composability of those rails, really, it helps make kind of this programmable money future that people have been talking about really live now and present. Mm-hmm. So I think these movements are really happening quite abruptly and quite significantly. And we want to provide the best services and opportunities to customers and clients globally. This is just an example of using it in a money fund specifically. Mm-hmm. What happens when you use these for the rest of the capital markets, I think, are really super interesting opportunities as well that we continue at Franklin Templeton and want to be on the front side of.
Mm-hmm. You've developed an app for the tokens, the BENJI app. It allows you, I guess, to browse, to also buy and sell. Is that correct, the tokens?
Our journey with the app, and if you
I'm just wondering the background or the
that's a really good question. Mm-hmm. The Franklin Templeton has historically been have used wealth managers, investment advisors, platforms to and working with those very important financial professionals who offer guidance to individuals and maybe institutions as well. That has been our business model. So we haven't been a direct to consumer business, but the journey to getting approval from the regulators in the United States, they said, look, if you want to offer FOBXX, BENJI, to all of these investors in the United States, you need to prove out that you can protect all investors, large and small. We decided to do that specifically within an app itself, kind of prove out the use case and the benefits and the safety of the entire system, again, to protect shareholders and customers and clients. And so that resulted in us, having an app experience where, BENJI Invest at the App Store, if you download it in the U.S. or U.S. citizen, you can invest in BENJI specifically, and you can move money around, quite frankly, instantaneously with your friends and family, and get a really experience on an individual level about what we really see unpacking on an institutional level, how easy this all happens, and an improvement of the existing system.
And so, do you trade within the app? Like, how does trading of BENJI work for the typical retail investor? Or
no, I think a typical retail investor would be quite critical, quite frankly, of the very limited purpose that's happening on the BENJI app right now. What we really see the opportunities unfolding is not necessarily just in this retail experience on the BENJI app, but again, money funds specifically are an institutional marketplace. Companies of all sorts of sizes and shapes and in all sorts of industries typically keep their liquidity in two places: a bank account and a money fund, quite frankly. And they're busy selling products and services, and they want to make sure that the money that they earn from doing that is protected in an important way. And so the adoption rates that we see of the ease of using this, really is something that's unfolding in front of us from people like even corporate treasurers. We are Franklin Resources is the parent company to the overall Franklin Templeton suite of investment services that we provide globally. Franklin Resources has multiple operating companies in the United States. Those operating companies have BENJI accounts, and our CFO and Treasurer's department literally moves money between operating businesses and allows that money to continue to sweat and earn interest all the time. The legacy operations would have a CFO or a treasurer liquidating a money fund, moving it into a bank account, transferring that into another bank account. Once that's transferred, move it back into a interest-bearing money market fund. Well, in this case, literally, they only have to, if they're both accounts inside of the ecosystem, the white label ecosystem, then essentially the transfer of BENJI occurs, and the assets are continuing to sweat on behalf of the corporate treasurer all the time. So there's efficiency gains and, keeping money at work, quite frankly, in the organization. So there's a lot of new and interesting things that are unfolding as a result of this. As you pointed out, a proof of concept just only a couple of weeks ago. And luckily, our proof of concept was really applied to a multi-trillion-dollar marketplace. Sure. But what we're really seeing is these things, it may actually grow money fund opportunities well beyond what their current environments are, because again, the utilities of riding on these blockchain rails allows new and interesting and more function to for the investors.
You mentioned the white label ecosystem. So just help us, me, our listeners and viewers understand what is the ecosystem that Franklin Templeton works with the token for it to move around among people who buy and sell it and so on. Literally,
a lot of these things have become to the forefront. The instant transferability and peer-to-peer transfer, the intraday yield that I spoke about. These things have been really unfolded over the past, quite frankly, about 15 months in the marketplace. And that's because our friends at the SEC were very measured in their approach with us. And
that's a diplomatic way of saying it.
Well, they are our friends at the SEC.
Sure.
It's really quite interesting about how, for sure, regulators now have come alongside in understanding how the improvements in this new ecosystem actually does help protect investors and provide more functionality. I mean, that's first and foremost, that's what the SEC is intended to do. But for sure, but in the, previous to January of 2025, there was a more measured, slow approach of things related to blockchain and integration of top blockchain technologies. And so inside of all of that, we could see all these possibilities and begin to develop toward them, and then seeking permission from the SEC to do this. Now that a lot has changed since January, and there's now just these massive tailwinds in collaboration and cooperation by regulators and industry participants. But by and large, in getting to this place, we have BENJI itself is finding new and interesting, markets that are unpacking and putting Franklin Templeton, quite frankly, into a whole bunch of new relationships and opportunities that we previously wouldn't had, because these are mega trends of using these inside of the capital markets. We just happen to be uncovering these maybe a little bit earlier than other market participants. But I think we have super high confidence that these digital wallet Web 3.0 ecosystems are going to be the place where we meet customers and clients. And so being really persistent with the SEC to get these permissions across that time period, and the tremendous amount of, quite frankly, legal expense cubs to make that happen, we understand being a pioneer sometimes opens the doors for others to come right behind you, but we're pretty confident in the technology that we've been laying down that BENJI will be something that will be adopted by lots of different users.
Mm-hmm. And so some of those users will be institutional, obviously brokers and other investment managers, hedge funds. What kind of would you see as the ideally the next players that come into your ecosystem and interface and use BENJI?
Well, I think one of your questions was like you were asking about the white label, right?
Yeah.
And so maybe I should explain that a little bit
Sure.
more. As part of the SEC's journey to allow what they call digital asset securities to kind of proliferate in a wider way. And when I speak of a digital asset security, that is specifically something that's a security that's riding on blockchain rails. To date, they have been very measured and limited in the ability for there to be what we call third-party distribution of those securities. Now, third-party distributors of securities has been a model that's existed on Wall Street for literally forever. I should take that back. Forever is that's a very
long time.
Term.
Yeah.
It's a very long time. But this idea that we would offer advice on mutual funds, and our friends at, for example, Morgan Stanley would want to use those mutual funds as part of a solution set for customers and clients. That and there's a distribution relationship. We're the manager. Morgan Stanley is the distributor in that case. That model is still unfolding for the SEC currently, but we see those changes happening in the months ahead, just as we've made massive progress in the past 15 months in all of this space. That we see a world ahead where there will be broker dealers who have permissions to be in the securities related businesses and have all of the compliance and infrastructure to be successful in doing that. They will be able to distribute these digital asset securities in a third-party form, and that's going to be a big tipping point for this entire industry in the U.S. when that happens. But I don't really think we're very far away in seeing that, because that's going to now allow other broker-dealer white labeled walled gardens environments. And again, we're talking about securities-related businesses here. We're not talking about migrating across the globe without doing AML and KYC. We're talking about those very important constructs that help protect investors and meet the high standards that are necessary. But inside of all of that, I think that's going to be a big tipping point when it's not just BENJI or money funds, tokenized money funds that are allowed to be sold by third-party distributors, but all sorts of different investment products and strategies. And why is that so super important? That's because we know that these Web 3.0 digital wallet ecosystems and the adoption of Web 3.0 wallets is, quite frankly, running faster. Global adoption of those wallet ecosystems is running faster than internet adoption did 30 years ago. That's a really super impressive thing to be thinking about. So there's a whole bunch of actors inside and platforms in these digital wallet ecosystems. You can think of a company like Binance who has, they have, I think, 270 some million monthly users of that. Those are Web 3.0 wallets. And what we really see from a strategic standpoint is that those actors and those platforms have been preparing and or filing for securities-related permissions with regulators all over the globe. So we intend on meeting customers in those wallets as these new ecosystems get securities-related permissions. We intend on meeting them there with more solutions that help their clients over the long term as well.
Mm-hmm. And just talk to me, you mentioned the intraday yield of BENJI, without going into direct comparisons to maybe other products, POCs that are on the market, but just drill down a little bit into maybe you would say the benefits of BENJI itself, both from the end investor standpoint, but also from the institutional user standpoint.
Yeah, I think that specific, the intraday yield is very interesting, and as a concept, if you as individuals were using it, and we could actually watch how much, because at the end of the day, we don't the amount of interest that is earned on the underlying collateral, underlying the pool of securities that underlie the money market fund, the FOBXX, or the other BENJI constructs that we have. It's kind of fun to watch it as an individual grow on a second by second basis.
And you see it tick, tick,
but
tick.
literally, what this is really finding adoption is in those very important parts of the capital market ecosystems. People like market makers, quite frankly, who might hold an asset just for a short amount of time. Well, here and now, they're able to hold that asset for however many seconds or minutes or hours that they do it, as they're involved in engaging, pair trades across a number of different assets. They can earn interest during that time period. And with all of the consumer-facing applications like Binance and Coinbase and OKX and all those type of things that exist on the planet Earth, and a growing number of them. The idea that still it's the market makers that underpin, that are making markets in all these assets, that really are a potential huge recipient and user of these things. And again, they can always let their money be at work when they can use these. So that's a really, the idea that they can do that is something that's very unique to Franklin Templeton and BENJI constructs inside of this space. And again, the reason that is, and these are maybe very nuanced, but I know your listeners here are indeed very nuanced.
Of course.
It's because BENJI actually rides on blockchain. What you're seeing in this migration of securities on chain is a lot of constructs that may be, let's have an additional share class of a product. Let's continue to use the legacy transfer agency ecosystems and platforms, but we will shadow record keep you this now in the blockchain environment. Well, that can be a baby step toward these outcomes, but really it's
not a revolution.
It's not a revolution. It's actually delivering on chain, similar to what I was talking about NASDAQ or other potentially large securities issuers coming on chain. If you are really on chain, then these things can unfold for you. Intraday yield and instant transferability can unfold right in front of you. So that is a very unique proposition that Franklin Templeton has created on our team. I'm very, very proud of our team for having to do that. The intraday yield, we have a patent pending in the U.S., for example. That is technology. I think we're doing our job by creating new processes that actually might meet the standards of having a patent written around it. That's the type of stuff and the thinking that we're deploying at Franklin
And make
Templeton.
real use of the blockchain for new and interesting things.
Real use case of the blockchain. This is, I'm not sure there's anything more boring on planet Earth than a U.S. government money fund. But when you bring it on the rails, all of a sudden now this increased utility, and this is what is probably going to be unpacking for, all the capital markets moving. What happens when you get onto these blockchain environments? What is different that you're not currently doing that actually customers or shareholders or investors, large or small, may value, quite frankly? And can you deliver new incremental utilities from being on the blockchains? I think the from our perspective, the answer is yes, and we're really excited about the journey forward about that. Because tokenized money funds is certainly not the end game for Franklin Templeton in this construct.
Just the first step. You mentioned stablecoins, and that's come up several times with podcast guests recently. Also, the fact with stablecoins that you can move money faster also over the weekend, which we know in capital markets is this big kind of black hole. In movement, we discussed that with Chris Zulker from Cumberland, DRW, recently. Yeah. And just talk to me a little bit about how a tokenized money market fund versus a fully backed stablecoin versus potentially a tokenized bank deposit, how those different things play in your mind in kind of the capital markets of the future?
Well, that's a really good question. Yes, they all will ride on, with faster velocity. This idea that the banking system still sits to underpin even, our tokenized money fund constructs. We are still dealing with a 5 business day a week environment as opposed to 24/7. And that is the real leap that stablecoins have had. And by the way, stablecoins are not a niche thing that's happening. I mean, it is a cold hard fact that in the United States that it is a geopolitical strategy by the U.S. to be able to proliferate and expand U.S. dollar stablecoins as deep as they can all over planet Earth. This is an extension of the idea that the dollar has been kind of the currency reserve for the planet for a long period of time, and current leaders in the U.S. are aggressively pushing forward that will continue to be the case, and they see the U.S. dollar stablecoin and the proliferation of U.S. dollar stablecoins as being the conduit that makes that happen, quite frankly. So the real question is, how do you interoperate, quite frankly, with the stablecoin environment? And that is a point that we're addressing all the time with regulators. That, you know, we've innovated to this place with money funds, and so oftentimes they're asking us our opinions. How do we create less friction? How do we eliminate friction between stablecoins and money funds so they become users? I think those things are being unpacked coming forward. We haven't had tokenized money funds for a long period of time, but you could see maybe market makers like Cumberland, quite frankly, making markets between tokenized money funds and stablecoins. Those both are very, kind of standardized, ubiquitous products. That's the type of stuff market makers love to do, and you could do it in super high volume. So that's a path that we're exploring as well to try to make that come about. But it's this interoperability that allows users to be able to use stablecoins at the velocity they do, but they can still earn this very important income and yield that might be available to them. Those are all part of our workflow that we're doing at Franklin Templeton and trying to create more network effects for our BENJI constructs.
I think you've said a couple of times that there are kind of two kinds of people in the world, two kinds of organizations, those with digital wallet infrastructure and those who want digital wallet infrastructure. I mean, first of all, why and how is it going with that? And probably that is part of the puzzle for this to go forward with stablecoins, money funds, and so on and so forth. JP Morgan has done many things in the space, but they're maybe not quite at the same level as somebody like a Franklin Templeton with digital wallets. And
you're right. I guess the way I kind of frame it is there is the have Web 3.0 digital wallet platforms that exist currently, and then there's the want the digital wallets. What I propose is the have digital wallet ecosystems. I mean, I don't just propose it, I know it. These platforms, as I mentioned already, are aggressively and pursuing securities-related permissions in regulatory environments all over the planet. And what that means is, what it feels like to me, because I have enough experience in large global financial institutions, that the want wallet ecosystems, the legacy players, it feels like the have wallet community will get these securities-related permissions likely faster than the legacy now want wallet ecosystems actually adopt wallets or can proliferate those wallets inside those ecosystems. So it feels like there's going to be this big market share opportunity by some of these actors to take market share from some of the legacy players as it pertains to securities-related activities. They're not going to supplant the investment banking and the actual relationship management that these legacy actors have. But, there's a lot of people on planet Earth that are unbanked, right? And so the proliferation of these digital wallets, which is running faster than the internet, as I mentioned, those are places that we see opportunity to bring product and services to. I mean, how often do you get a chance to bring, to begin to network with 275 million new users, monthly users? That feels like a really important opportunity for Franklin Templeton, and that's why we're excited about some of the conversation that we had with around a partnership with Binance that we announced just a couple of weeks ago. Those things don't come about every day, right? And sometimes they don't come about in an entire career, quite frankly. It just so happens that the change is happening so rapidly inside of these marketplaces that those things are unfolding. And again, we want to be there. We want to be able to have our ear to the ground of those customers. Those might not be our legacy customers, but we have a culture at Franklin Templeton to listen to customers and create products and services that they need. So this is an exciting thing to be able to do this type of stuff. But yeah, that is kind of how I frame it. We have a firm conviction that everybody will be in these Web 3.0 ecosystems over time. It's just a matter of how fast people can get there and organizations can get there.
At the same time, you have kind of this financialization of crypto. I mean, we had spot Bitcoin ETFs in the States that were this huge thing, and also, to be quite frank, a driver of price to a certain extent. And so you have kind of this, and critics, of course, point out the conundrum of financialization. Now crypto is in an ETF, nothing revolutionary about that. On the other side, a tokenized money market fund, actually quite revolutionary. In both cases, it's large financial institutions pushing this.
Yeah.
Is that a necessary evil, so to say, that pushes the space forward and drives adoption?
Well, you're never going to hear from me that large financial institutions and the word evil. I'm not going to equate any of those.
Of course not.
But I follow what your line of thinking is. Look, I just think this is a natural rate of adoption of technologies. You know, like a lot of technologies, there's early movers. There's passionate followers. Those proliferate. Those catch the attention. Why are they so passionate about Bitcoin and blockchain and these ecosystems? Now, you really have to experiment and understand in that. And I think, kudos to us and our team for being able to do that, and kudos to our senior management that said, yeah, test something, work it out. What do you want to do? And give us the resources to be able to make those things happen. But I think really a lot of organizations have this creativity that sit underneath them. This is what I've also uncovered about our own organization of literally thousands and thousands of employees all over planet Earth. There's a whole bunch of enthusiasts in this space. They're really happy to work in a very, kind of stable financial organization where they get a good paycheck and have a nice standard of living. But this is all stuff that they're doing, on the side and they're interested in. Well, I've just created the opportunity, and our team has created the opportunity to unleash that creativity across the organization. You have permission to bring ideas in this space, no matter whether you're in the, the investment professional, or whether you're in the marketing department, or you're in client servicing, whatever you're kind of doing. We want to tap the creative side of your brain and be able to innovate, because innovation is happening so quickly. If we don't innovate, we'll be left behind, quite frankly. And so that's the kind of a secret sauce that I found time and time again. There's blockchain and crypto has caught the attention of a lot of actors. We even find this in the United States. It's amazing. We do surveys of financial advisors in the United States. There's a large portion of financial advisors who themselves personally invest in this space, but because the gatekeepers at the mothership that they work at have not yet really fully adopted it, they're not able to offer the same discretionary advice that they use in their own personal portfolios for their clients. We think that's a huge disconnect, quite frankly, but it also means that we're at a tipping point that once those barriers are cleared, that it becomes more mainstream. And I think it's natural. Financial institutions have always been very tech heavy, right? Financial institutions sit in between two large camps. I'm sorry that I simplify the world in these spaces, but those that have capital and those that want capital, right? And they're an intermediary in between that. And those that have the capital want the highest returns on their capital. And so all of the costs in between where they're investing capital, technology has continued to whittle away those costs and increase efficiencies. And I think blockchain is another one of those iterations that continues to condense pricing and allows for those that have capital to earn higher returns on that capital. And it's natural that this technology finds itself embedded once regulators get out of the way to be able to be adopted in a wider way and have massive use cases.
So maybe even other big global banks have some kind of fermenting innovation people inside of them that will eventually come out when the space is ready.
I think you're already talking about that, tokenized deposits, right? The bank is the one who offers deposits, right? Yeah. You deposit money at the bank. They go and earn and make sure that you can get your money back when you get deposits. And to the extent that they tokenize those, there's a lot that are already active in doing that. How it all interoperates as we move forward, I think, is something that we continue to unfold. I get asked questions by really smart people like you all the time. Like, what do you see going forward? The next 2 to 3 years. And it's like, if you'd have told me this is where we were 2 years ago, I probably wouldn't have predicted this. So the pace of change is pretty abruptly. I do know there's going to be more digital wallets, by and large. I feel pretty confident about that. And so I think you're going to see a lot more options being delivered inside of those digital wallets. And I think we're going to unpack even new and interesting types of asset classes that can be delivered into customers' and clients' wallets as well that that bring more emotional value rather than just particularly financial returns into their experience. So it's a really exciting time.
I wanted to ask you that about tokenization and what comes after a money market fund. Like from your perspective, from Franklin Templeton's perspective, I mean, regulation is moving along in the States. It's coming along quite quickly now, so there's potentially many opportunities. But where would you start if you went to the next thing beyond a money market fund?
Well, I think it all, again, starts with listening to the customers. So who's holding the wallets? What are their long-term needs? Are they institutions? Are they individuals? What are the products and services and advice that we render across our broad array of assets classes to come to deliver in those? And those asset classes, aren't just public markets, but they're private markets at Franklin Templeton to deliver those outcomes in these new tokenized forms to those clients. And so I think we're going to be, it's not a matter of what's next, is like, how can you process all of what's next? But what I think is every bit as exciting is, I once had a friend and colleague at Franklin Templeton who had spent time at CALPERS, which is one of the largest pension plans in the planet. And of course, CalPERS sees every investment opportunity that you could possibly see. CalPERS had a consulting project done for them by a very large, not to be named tech company. But that tech company said of all of the assets on planet Earth that we would identify as assets on planet Earth, you CalPERS are probably only seeing about half of them. And you see everything. Every purveyor of investment advice in the private and public markets comes to you and pitches product to you to be able to weave into your portfolio. But you're probably only seeing half of them. In my mind, in my experience, I begin to think about these blockchain technologies, how they might unleash the other half of those Earth planets of assets to arrive in a form that they can be consumed and invested in by individuals and institutions. Now that's a big statement to make, and to get from point A to point B in that takes a lot. But the number of and interesting ideas that we hear from, I met a guy at the conference here in Zurich that we're sponsoring, the CV conference here, CV Summit conference that we're sponsoring here in Zurich in these last couple of days, who has these super interesting silent wind farming. I guess they would be what am I going to call that apparatus?
The windmills.
It's a windmill, right? But it's not the legacy ones where you see where there's 3 prongs or 2 prongs and they're spinning this way. It rotates in another way, and they're silent by and large. But you start thinking about, well, that wind, as long as the wind is blowing, this gentleman is going to produce something that produces an asset, energy. That energy can be sold in the market for cash. Part of the promise of these things like tokenization is, can I tokenize that guy's windmill and basically share cash generation based on when the wind's blowing to individuals and institutional investors? It feels likely. So what I'm saying is, for lots of numbers of years, investors have had to eke out the efficient frontier to get more return, but that really implies taking more risk. It also implies that the world is a 2-dimensional world that's just risk and return, and we know the world is far more than 2-dimensional. It's for sure 3-dimensional, and it may even be 4 or 5-dimensional by and large. In building portfolios for clients of the future, I think this blockchain and the technology and the tokenization, that as it grows, not just from money funds into the rest of the securities market, but helps bring other things to be investable, we actually shift up the efficient frontier, but not just the frontier, but that entire plane. Other people have other, it's not just risk and return that they seek with their money. They seek emotional attachment. They seek a whole bunch of other things to do with their money and investments. And in so doing, I like to think that pioneering work in this space is actually allowing for better outcomes, because we will shift up that plane that exists that that will allow for them to be more outcome. And for wealth managers and platforms that begin to go down this journey, I think they're going to find that doing so will actually mean clients remain sticky on top of their platforms for a longer period of time, because you're meeting clients not just where their financial needs are, but in many ways their psychological and emotional needs as you weave these things into their portfolios.
Okay.
That's very conceptual and pie in the sky, but hey, you got to have some ideas about where you're headed toward if you're going to be doing anything, right?
Good. I just want to throw in one question about the technology, since we know it is actually all about the technology. We're talking blockchain technology. You launched BENJI in its first form on Stellar, not Ethereum, although Ethereum is covered quite well by Franklin Templeton's research, and I know you're in the space as well. Can you just give us high level what the considerations are from the perspective of an asset manager when you go to actually pick up the technology and use it, maybe why you chose Stellar, and what are the things that you consider going forward with?
Our friends at Stellar, we've had this collaboration for a number of years now. I think it's safe to say that getting a product from concept to delivery and the paths that we do, because we are a highly regulated provider of services, going through those regulatory gates means that you're involved in conversations. It's much easier to describe the Stellar blockchain environment because it has historically been a much more constrained environment. We know that for several years, the points of vulnerability for blockchain and blockchain ecosystems were through smart contracts, quite frankly. And Stellar didn't, Stellar is deploying smart contracts now, but for a long period of time that they did not. They were much more they were much more constrained environment. And in that's an easier conversation, quite frankly, with regulators when you're operating and you're starting at a place like that. And so we started with Stellar, and hard to beat the cost of Stellar, quite frankly, if you're buying records. I think that's the thing that people don't always understand about these digital nation states that we call blockchains. The cryptocurrency is
not free.
No, it's not. It's the cryptocurrency is the transmission mechanism for which you do economic activity in this digital nation state. Franklin Templeton is putting records on blockchain. We pay for that record-keeping system just as we would in any legacy database system. There's cost of deploying the database system. So if we're using these blockchains, we have to own Stellar lumens to record transactions on the Stellar blockchain. We have to own ETH to record transactions on ETH. And as a result, for sure, pretty attractive price point on Stellar lumens if you're doing
lots and lots
a lot of volume of transactions. That's exactly right. Now, what we have learned over time, we just as in our 80-some years of existence as an asset manager, and we journeyed super importantly in the early 90s when we moved outside of the confines of the United States into the global marketplace when we acquired Templeton, and they were distributing globally. We see these digital nation states as ripe distribution platforms moving forward. They're attacking certain markets. They want to grow the GDP of their blockchain nation state environment. And we want to be able to bring products and services into those environments because we think there's going to be choice, and we do believe and are working ourselves on interoperability between these blockchains moving forward, and the blockchains will continue to iterate. And so while we started in Stellar, yes, we now have about 9 different blockchains that we use, and we're a little bit agnostic between just like the public blockchain and also permissioned blockchains. Capital markets have historically been really reticent to have a massive transparency. Now, the regulators really like that part. That was a selling point to the regulators about, hey, now with the public blockchains, with the type of, quite frankly, surveillance systems that you as the government can deploy, you can see visibility into a lot of these transfer agency activities where previously you may have had to go to a court and get a subpoena to be able to go into somebody's record-keeping system and look for nefarious activity. Now there's more transparency. So the public blockchains do offer that, but we also know that some of the customers that we are signing up in our BENJI constructs aren't really interested in having everything that they do being shown on a public blockchain. And so we also journey toward other super interesting blockchains like, for example, Canton as well, which is not fully decentralized in the same way like Ethereum is, but we think is going to find really a wide adoption as well.
Very interesting. We're going to have to wrap things up. It's been a great conversation. I would give you the question about what you see coming up in the future. I would maybe frame it a little bit differently than normal. Is there something at Franklin Templeton that you are considering or exploring or researching that maybe not too many other people have on the radar that you think will be important in the next iteration of your products or the next development in the market?
Well, look, I think if you just take the leap that, securities markets and securities opportunities, whether they're public or private, are going to come on chain, there's really nothing I could tell you like, oh, this particular asset is going to come on chain. But what we do strongly believe in is, delivering those solutions to clients and exploring things that don't currently exist as investable assets into clients' portfolios. Even investors in cryptocurrencies themselves have taken that journey. And being able to invest in networks by owning the cryptocurrency is a big leap versus where we were even 15 years ago, right? But we see that growing and these blockchain technologies allowing us to tap even more in interesting new asset classes to bring into the environment. So that's very conceptual ideas, but for sure, Franklin Templeton is going to be in the mix, and you're gonna see us super active all over this. And we super appreciate the chance to be able to talk to your listeners here today.
Thank you very much, Roger Bayston. Thanks for joining RULEMATCH Spot On. Look forward to maybe a future conversation sometime down the road.
When I can get back to Zurich, be happy to participate.
Super.
Thank you.